Good evening, I'm Brigid Taylor and this is Currency Wars. We'll be announcing the winner of the BlackBerry Q10 at the end of the show, but let's first take a look at the notable highlights of the past week. The rand's traded between 10.48 and 10.75 over the past 2 weeks as the resurgence of global political concerns and sluggish domestic data plague the local currency. Russia remains in the newswires and is expected to impose quite substantial food bans on the US and the EU. The retaliatory measures to the countries opposed to its actions in the Ukraine imply that we are unlikely to see a de-escalation of tensions anytime soon, as military intervention continues to threaten. This keeps political tensions brewing amidst the global unease. Business conditions in South Africa's private sector deteriorated further in July, with the Purchasing Managers Index falling to a record low of 46.4, as the recent strikes in the mines and metal industries hit demand. Meanwhile abroad, the BOE and the ECB made their respective policy announcements today. As expected, there were no change to current policy. Given the strength of the UK recovery, the Bank of England's next move is likely to be tightening, although such a move is not expected until the first quarter of next year. Meanwhile, the European Central Bank remains accommodative, as sluggish Eurozone data suggests potential for further accommodation. In the US, however, the Federal Reserve remains in a watch-and-see mode, and as such, investor sentiment remains skewed towards liquid sovereigns with higher yield, and as such, support for South African yields persist at these more attractive levels. This is assisting to keep the rand within these current ranges. Now that we've seen the lay of the land, I'd like to welcome Eerenstein from RMB. Welcome once again.
Hi,
right, so let's see where we're going to from this week, because I've gotten a little bit of criticism in terms of our initial view. We were talking about rand potentially going through that 10.48 when there was that risk on trade 2 weeks ago. So it did look like there was the opportunity, but that 10.48 held firm. So an interesting trade because we're still within those ranges, that sort of 10.50 up to 10.75, 10.85, and we haven't really budged. So let's talk about just where we stand with regards to offshore interest rate decisions. Obviously, the backdrop in South Africa is still not rosy. So let's focus on ECB and BOE to start off.
Well, BOE is probably going to be the first one to raise rates. The UK economy is doing exceptionally well. Inflation seems to be kept in hand. So, Governor Carney is going to, he's probably going to raise rates. He doesn't want to. The housing bubble that's appearing in the UK, or London in particular, is of concern.
Yeah, that will prompt it. But they're talking first quarter of 2015. So that still gives us another sort of 6 months before we start to really worry about it.
Sure, and I think they'll push it out as far as they can. I think potentially following shortly after the BOE will be the Fed.
I was just going to say, so what's your call, BOE or Fed first? Because I think they're pretty much on par in terms of the data that we've seen. The growth, it's not significant, but certainly the prints that we've seen in terms of the data that's come out of both the US and and England have been, surprisingly to this upside. So that's positive in terms of our other, developed nations. But I mean, if we look at the Eurozone, that's not the same picture at all, right?
No, absolutely not. I think the Eurozone is going to remain in trouble for a while. You've got two-year benchmarks, German benchmarks trading below zero. Sure. Your 10-year benchmark is marching over 1%.
Yeah, that's nothing, hey?
So those are German assets. So obviously people are looking, if they're looking for yield in Europe, you're buying the peripheries.
Yeah, no, absolutely. But the thing is, we're looking again at the peripheries taking strain. I mean, we're looking at the comments around Italy potentially being in recession. So these kind of issues are not really going away if we look at one of our major trading partners being the Eurozone. So if we bring it back home and we look at our own monetary policy, and we've just seen that 25 basis point hike, potentially another 25 basis points in the cook for the remainder of the year, what do you think the view is in terms of offshore investors looking for that liquid sovereign that's got a high yield?
Well, yeah, there are quite a few, particularly now when you're getting towards the end of quantitative easing. The choice for emerging market assets there's quite a lot. You could buy Brazil, you could buy Turkey, South Africa. Yeah, selectively, but I don't think it's just a blanket purchase that we saw like 2 years ago.
Sure.
If people were buying EM, they're buying EM in general. I think now asset managers are very selective in terms of what they're buying and what emerging markets they're buying.
Yeah, and the underlying fundamentals, and I think that speaks to some of the underlying issues in South Africa obviously do plague that investor sentiment. But we were talking offset and just saying, with regards to National Treasury issuing as much as they are, and obviously keeping the longer end pretty well priced. I mean, it's relatively cheap if you look at other emerging markets, specifically because of the liquidity within that type of area of the curve. Do you think that that'll continue to support the rand?
Yeah, sure. I think asset managers will continue to buy bonds.
Yep.
We in the emerging market bond index. We will have to, given just purely the weighting that we have and the yields that we have. Asset managers are forced to buy. Whether they go overweight or neutral is a different issue altogether.
Are you talking about local asset managers or offshore asset managers?
Well, offshore asset managers. I think local asset managers, their fundamentals are driven a little differently.
Yeah.
You know, the local benchmark, the 157 has just fallen out,
yeah.
which is the very short-term bond that's maturing. So asset managers have to go longer duration, and that's what they have been doing over the last couple of weeks.
But the issuance is mopping that up. So, you know, those higher levels that we're seeing in terms of the rates on the long end, they still offer that attraction. So, you know, from my perspective, it looks as though that's one of the issues that has protected the rand or kept it within those sort of ranges that we've been talking about, whilst interest rates remain low across the globe. And that's really the key here in terms of what is the data that we're seeing offshore, what do the local fundamentals look like, and when do we start to see that movie change? Because I think that's where the big issue is going to come.
Our local fundamentals are shocking. You know,
yeah.
there's no dressing that up.
Yeah.
You know, we've got a growth problem that's on a downward trajectory, and we have no idea where that's going to stop.
Yeah.
The inflation pass-through, that's going to rear its head at some point.
Yeah.
You know, it's been fairly muted up to now, given
but then
the
we're
weakness
looking at
of
the
rand.
manufacturing and the production numbers. I mean, those are shocking, and that's all the first half strike action that we saw, which we're still going to feel knock-on effects from. However, you know, if we look at commentary around where the rand's trading, it's been very interesting to see that we haven't seen these massive blowouts either way. So it's been relatively well contained, which has been quite an interesting scenario, because as we were talking a while ago, saying, thank God, risks back on, maybe we've got those opportunities to buy cheaper rand, but it really looks as though it's well supported on the downside.
I certainly think that the rand has very limited downside. I think if we see 45, potentially even 40, it's if you look at the macro big picture, it's not a substantial strengthening.
Yeah.
Going through that, it's going to take quite a lot of fundamental good news, which I can't see coming out.
Yeah.
So for me, given the event risks and the potential, you know, solutions or non-solutions of what's happening in Europe and Russia and in Asia or in the Middle East, you know, all that's going to point to keeping treasuries, i.e. US treasuries, very well bid. So it's more of a risk off in emerging market space, and that's going to keep the rand probably between 65 to 85 range until something fairly significant comes around.
And what is your view in terms of watching the rand as a commodity-based currency? Because I mean, we've seen what's happened on the gold price. We saw our foreign reserves, you know, just because of the rand and the revalue of the dollar, of the gold price, coming off a little bit, but nothing significant. Do you think that South Africa is still viewed as a commodity-based currency? And I mean, if we look at the Aussie dollar, that's done phenomenally well on the back of that. We've managed to remain range-bound. What is your view?
Yeah, it still points to fundamentals. You know, we're commodity-based, but it doesn't really help if we don't get the commodities out the ground.
Yeah.
So, you know, our fundamentals remain very weak, and people are looking for yield can selectively choose. And at this point in time, I don't think South African assets are that attractive.
Okay, so let's look at if we have got a bottom side and we're looking for a top side and it breaks above, which levels are you looking at? Because, you know, the feeling in the market is that once we break through the top side, there's quite a big gap above 11 again, 11.05, if we do go through that sort of 78, 80 level. What is your view in terms of the technical levels that we can watch for on the top side?
I think if it goes through 85, we'll test 11, through 11, we'll go 11.10, 11.12. Through there, it's a very big jump, and we'll test 11.75. But that's going to be in a position, going to put the SARB in a very difficult position.
Yeah.
And I think, you know, if you think there's going to be 25 basis point hikes over the next, you know, to the end of the year, I think if rand's at around 11.50, 11.75, you know, we could potentially talk about 25 and then probably even 50 in November.
Yeah, so that puts a whole different spin on it. Great, now that we know where we stand, the real risks and opportunities, we're going to pull out big guns. Andre, let's talk about technical levels and real levels for this week, as we've obviously, you know, it is a bit of a thumbsuck because we were in the middle of a range, but let's talk to our viewers just in terms of where your trend is and what you're looking for.
I still think the range is going to be around 60 to 85. I can't see it significantly out of that range over the short term.
Okay, and what do you see the risks to the top side being in terms of fundamentals that we can watch out for?
Well, we've got to look at what's happening at the geopolitical issues that are happening in Europe and Russia. I think if that escalates, I think we open up to the top side towards 11.
Okay. Right, so in conclusion for the week ahead, the Rand looks to still remain within that range with a little bit of a weaker bias, looking for a bottom of around 1060, potentially up to 1085. If it does break north of that, then it potentially can trade as high as 11. However, for the short term, 1085 looks to be the top. Now, as promised, the Rand's close versus the dollar was 10.7020 on the 31st of July. And the winner of that BlackBerry Q10 is Meg Dani Al Jose with a prediction of 10.70. Well done, Meg. Remember to send your questions and your comments to @CNBC Africa, #CurrencyWars410, or myself at Brigid Taylor. Until next week, good luck in the trenches.